You are not years away from buying a home because you're unqualified, but you might be years away if you believe any of these three mental barriers are stopping you. So let's walk through the top 3 mental barriers I see that stop people from becoming homeowners, and let's reveal the truth behind each one. A lot of people assume that they are not ready before they ever talk to a professional, and the biggest obstacles are often misinformation and fear, and not always based on actual loan guidelines. So this video is for people who feel discouraged, intimidated, or unsure where to begin. And the goal here is to replace myths with clarity. So let's start with the first and probably most common barrier. Many people think they need elite credit to buy, when in reality there are loan options for buyers with credit that's good, fair, or even still improving. Perfect credit is not the requirement. Mortgage ready and strategy ready are two different things. People hear phrases like, "You need great credit." Well, they compare themselves to people with 740 plus scores and assume that one past mistake means that they're disqualified. Some people had a lender or a bank turn them down once and assume that means never. The truth is, you do not need perfect credit to buy a home. There are different loan programs with different credit requirements, and a buyer can sometimes qualify with a score that is much lower than they expected. Even when someone is not ready today, they may be much closer than they think. I see this all the time. There's a difference between being unqualified forever and not being quite ready yet. A lower score may affect your loan options, your interest rate, down payment assistance eligibility, or monthly payment. And that does not always mean that home ownership is off the table. So instead of asking, "Is my credit perfect enough?" ask, "What would it take to make me mortgage ready? Am I 30 days, 90 days, or 6 months away?" Someone with a 760 score may get more options, but that does not mean a 620 or a 640 borrower has none. Someone with credit issues from the past may still qualify if the current profile is improving. And someone may not be ready now and just need a focused plan, not a miracle. Bad history does not equal a bad future. Credit can be worked on. The worst move is assuming you have no options and doing nothing. Perfect credit is not the primary goal, a clear game plan is. The second mental barrier is another huge one, and it stops a lot of borrowers before they even look at numbers. Barrier number 2 is needing 20% down to buy a home. A lot of buyers believe home ownership requires a massive pile of cash when many loan options allow far less. 20% down payment is one option, but it's not the entry fee to home ownership. Where this belief comes from is old and outdated advice that has been repeated for years. People hear that avoiding mortgage insurance requires 20% down, which it does, but they assume that if 20% down is ideal, it must also be mandatory. They see high home prices and mentally disqualify themselves. The truth is that many buyers purchase with far less than 20% down. Depending on the loan type and financial profile, the required down payment may be significantly lower. Some buyers may even have access to down payment assistance or closing cost help. Needing 20% down and wanting 20% down are not the same thing, but waiting years to save 20% may not always be the best or only path. Instead of asking, "How will I ever save 20%? ask, "What is the minimum cash needed for the type of purchase I want? What are the total funds needed, including down payment, prepaids, and closing costs? And are there programs that can help bridge the gap?" Down payment is only one piece of the puzzle. Buyers should understand the full cash to close picture. Sometimes things like family support and gift funds, or co-signing on the loan, or using seller credits to buy down your rate and cover closing costs, or down payment assistance programs and grants can make a purchase possible sooner than expected. Many renters are already paying enough monthly to support a mortgage, but they think the down payment hurdle makes ownership impossible. This myth keeps people renting longer than necessary, and some buyers delay for years chasing a number they may not actually need. Knowledge creates options. 20% down is not the rule, it's just one strategy. And the third barrier is a little different because this one is less about qualification and more about fear. Barrier number 3 is thinking that you have to time the market perfectly. Many people think they need to predict the perfect moment for rates, prices, or the economy before they can move forward. And that mindset often keeps them stuck. Trying to perfectly time the market can become a form of procrastination dressed up as a strategy. Where this belief comes from is that we're seeing headlines that are constantly talking about rates, prices, crashes, and competition. People are afraid of buying at the wrong time. They want certainty before they make a major financial decision, which is totally understandable. But some are waiting for the magical moment where prices drop, rates drop, and competition disappears all at once. The truth is, no one consistently times the market perfectly. So the question becomes then, is this the perfect market? But the better question is, am I personally in a strong position to buy? There are two markets that matter. There's the housing market, and then there's your actual personal market. Your personal market includes your income, your credit, your job stability, your savings, the debt to income ratio, and how long you plan to stay in the home. People can buy in a higher rate environment and refinance later if the opportunity comes. But you can also try buying in a lower rate environment, but you are going to face bidding wars and higher prices. Every market has trade-offs. Waiting is not automatically safer. Waiting has a cost too. More rent paid, less personal wealth being built through equity, possible increases in home prices, and the ongoing uncertainty. Someone who is financially ready now may benefit more from buying with a solid plan instead of endlessly waiting for perfect market conditions. And someone who's not yet financially ready should absolutely prepare first, but that's different from trying to predict the market. The real win is buying when the purchase fits your finances and long-term goals. You do not need a crystal ball to become a homeowner. What you need is preparation, affordability, and a strategy, because the perfect market may never arrive. Let me give you one quick bonus barrier that I see all the time, and this is the one that trips people up at the very beginning of the process, thinking that they need to find a realtor first. Many people think the first step is finding an agent. However, the smartest first step is often getting your finances, your strategy, and your buying power clear first. Let me be clear, a realtor is very important. They do not always need to be step one though. People often associate buying a house with touring homes. They assume the home search begins with an agent opening doors, and friends and family will often say, find a realtor and start looking. Some people get focused on the house first and not the financing or game plan behind it. The truth is, a realtor is a key part of the team, but not always the first call. Before house hunting, you should understand what you could qualify for, what monthly payments feel comfortable, how much cash you may need, and whether there are any credit or documentation issues to solve first. Without that clarity, looking at homes can create confusion, disappointment, or wasted time. Sometimes people fall in love with homes outside their true budget, and they may not know whether they qualify for certain programs or assistance. And then they might start shopping before they're actually in a position to write a strong offer. A good strategy up front helps the realtor do their job better too. Instead of asking, who should my realtor be, ask things like, am I financially ready to shop? What price range makes sense for me? And again, I want to be clear, this tip is not anti-realtor at all. Great realtors are incredibly valuable, especially ones that understand the neighborhoods you're looking at. And in many cases, once you have clarity, getting connected with the right realtor is the next best step. The point is simply that shopping should usually follow strategy and not replace it. The first move isn't always finding a home and then finding out whether you qualify for it. In many cases, the best move is getting clarity on what you qualify for so that you can find the right home for your budget. The final takeaway here is that you do not have to have everything figured out before you start. What you do need is good information, and a quick diagnostic of your financial situation can tell you whether you are ready now, if you're close, or if you need a plan. And if you want clarity on what it would take for you to buy, please reach out. I'd be happy to help and map out your next steps. I can even help with credit improvement, among other things.